Hi, and welcome to the Stockscores Market Minutes for October 24th, 2014. This week I'm going to introduce you to the new Stockscores Education Center. But before I do that, I want to talk a little bit about the upcoming events that we have live across Canada in the cities that you see on screen: Toronto, Ottawa, Montreal, Edmonton, Calgary, Vancouver, and Surrey. You can register and get details for these upcoming events at the address you see on screen, or just jump over to stockscores.com and click on the Learn More button in the upper right-hand corner of the website, and it will take you to a page that has all of the details, and you can also register there. All right, let's get into what the Stockscores Education Center is all about. This is something we just launched last week. It is a tool where you can learn to invest and trade, but from the comfort of your own home. Whether you want to be a long-term investor or a short-term active trader or something in the middle, I've created probably 30 or 40 lessons that teach you those things. And some of them are free. Some of them are part of what we call the foundation bundle. And then we have the investor and active trader strategies and processes for doing those strategies. Each lesson typically comes with I'll show you here actually. Let's jump over to the Education Center. So you'll see there that we have a written lesson. You can click on, for example, predictive chart patterns, and it's all explained there on screen how that all works. Now we can jump back, and then there's also a video that explains what is in the written lesson, and that can play right there. You can make it full screen if you want by clicking on the little full screen button in the bottom right hand corner and watch that video. This particular one is 26 minutes long. I tried to break the components of this course, if you will, into small pieces so that it's manageable. Once you've completed the video and the lesson, then you can take the assignment, and it tells you some things to do to make sure you understand those concepts. And then finally, we have a test. So you can take a little multiple choice test, and you can see if you really understand the concepts that were in that lesson. Now, as you go through this, you'll learn beginning with some pretty simple things like the basic elements of chart patterns, and you get up to the point where you're creating a trading plan, developing your own trading strategies, that sort of thing, if you don't want to use my trading strategies. There's also free content on this area. You can really learn how to use a lot of the tools on the Stockscores website with these tools or with these lessons. They're just videos, but you can watch, for example, a video on how the market scan tool works or how our charting works on Stockscores. So be sure to give that a look. I think you'll find it pretty cool. If you are one of my past students, you'll be upgraded to this stuff. If you want to take one of these courses, you can sign up right online, and your access is instant. You don't have to wait for us to give you access. You will have access as soon as you have registered for it online. All right, let's get into the analysis this week. So we've had a lot of volatility. You can see the volatility over the past 3 or 4 weeks has been pretty abnormal. We broke the upward trend line 3 weeks ago, and that looked like we were going to fall to the longer term upward trend line, which I have here. The market's rebounded very well this past week, and now the key is whether the market makes a falling top or if it moves back to the highs of September. If we make a falling top, so let's say, Monday morning we don't really get up above 2,000 on the S&P 500 and we roll over again, then I think we're going to test this longer term upward trend line. Now, putting that all in perspective, that's maybe 5% lower than where we are now, but in the big picture, the market remains in a bullish trend, and it's been in that bullish trend for a number of years. So we're seeing volatility, and I think for most investors who are planning for their retirement, they shouldn't worry about this too much at this point. Don't get caught up in the volatility, because at this point it's not a real negative yet, and it doesn't look like it will be. It looks to me like we'll probably go back and retest those highs. I do think that we could see the market go sideways for a little while as people sort of digest all of the goings on of the last little while, and certainly confidence is broken a little bit by this. But at this point, the chart still looks okay. Longer term, what we want to again look for is, does the market make a falling top or does it move to a new high? My guess, 65% chance is we go back to the highs of September, 35% chance we roll over, make a falling top, and test the lows again. Here is the chart of the Russell 2000, which is the small caps, and it's actually outperformed the large caps in the last couple of weeks, and that's a good sign, because for traders like me who want to trade alpha, who are looking for individual stocks that can really make big moves, those tend to come from the small cap area. And the small cap area has been pretty dead the last 6 or 7 months as we've been going sideways in that market. And it looks like it's maybe going to start to come alive again. What we ultimately need to see is this cycle of falling tops broken. So it's got some work to do until it gets to that point, but that's what I'm watching for, if we can break through that red line. Certainly the bounce back in the last couple of weeks has been encouraging. Canadian market broke its long-term upward trend. Keep in mind that this is from a high, and therefore we haven't really destroyed the confidence in Canada yet. What we want to watch for is, does the market go back to the highs, or does it make a falling top? Now the issue here is commodity prices, and really that revolves around the strength in the US dollar. The strength in the US dollar has hurt oil prices, has hurt gold prices, silver prices. Of course, the mining industry in Canada on the market is big, energy is big, and that's been really the motivator for this pullback. Now we did get a good bounce, and it looks like that bounce is going to continue. The key thing to watch for is, does the market make a falling top, or can it move back to a new high? On the TSX Venture, it's really a dead market, heavily based on commodities. You see the dramatic sell-off we've seen in the last couple of months, and that is something that has really hurt the Canadian speculative market for the junior mining stocks and the junior energy stocks. So at this point, very few stocks in this market will do well, but there's always the potential that some can do well, because at the end of the day, it doesn't matter what gold prices are. If a company discovers a big deposit of gold, it goes up. That's just the way it works with these small cap stocks, so, and really micro cap stocks. So be very selective on what we trade on the TSX Venture. Until the market condition starts to improve, you got to be pretty cautious with it. Treasuries are in an upward trend for the last year, and really no signs that they're ending that upward trend. A little on the overbought side right now. If we were to take a parallel to this green line and put it along the top here, you'd see we're at the top of the channel. So I think short term we could see a little bit of a pullback in this, but then nothing to stop the market from continuing higher. It does have that longer term resistance at the red line there. So interest rates, short term may go up a little bit, but there's not an exceptional reason that interest rates are going to go up dramatically, although a lot of people think they should. The chart really doesn't support that at this point. On the UUP, which is the US dollar, we had a couple weeks of pullback, and that gave some stability to the energy sector and to the miners, or the commodity stocks in general. But the US dollar is still very strong, and it has a long way to go until it gets down to that upward trend line. So this week it actually went up a little bit again, and we may see it try to test this level of resistance again, and that's going to be harmful for the for the commodity stocks. On the gold market, you know, it's held support. That's a good thing if you're long gold stocks, but the mood in this market remains pessimistic. You see falling tops over time towards support, and that just indicates to me that this is a market generally to avoid. You can probably trade some of the better gold miners who really got beat up too much, and if you're a savvy trader, you can take advantage of some bargains if you know how to trade that, but generally I think you want to avoid the gold market still. Similar story with energy. In general, it's been hurt. The sector's been hurt in terms of the confidence, but there's a lot of really oversold stocks in the sector, and so I think for the savvy trader, there's an opportunity to make some money on these stocks that just got beat up too much, going up a little bit again to come back to where they should be. And I think you want to favor the stocks that did really well at the start of the year. Those were the leaders, and they probably got beat up more than they should in this recent downdraft, and that's where the opportunity is. But in general, I think it's going to take some time for the damage to be repaired in the energy sector. On the VIX, this is what I've been trading a lot lately. Lots of volatility, lots of action. The last couple days this week, we had very narrow ranges. It was a little bit frustrating to trade, and that indicates to me that we're at a turning point. We're either going to see volatility pick up to the upside again if some fear comes into the market, or we're going to break this trend line here in the XIV, which is the inverse of the VXX. It will start to do well again. And you can really sense that the market didn't really know what it wanted to do on Thursday and Friday. It was a real toss-up, and it made it a bit of a grind to trade those 2 days. All right, so my outlook then, U.S. stocks, I've got a neutral rating on the short and long term. The market's holding that long-term upward trend line, but there's going to be volatility. It's going to make it a little bit challenging for traders. On Canadian stocks, neutral long-term, bearish short-term. I just still think we've got a little bit of extra fear in the market because of the the emphasis in Canada on the commodity stocks. Gold bearish, long-term neutral, short-term because it is at support and holding that in the short term. Oil bearish on both time frames. I do think there is opportunity in some of the really oversold high-quality energy names that got beat up too much, but in general you want to be pretty cautious there. The market continues to stabilize, but nervousness remains high. There's a 35 to 40% chance that the market will retest its recent lows, but of course the 65 to 60% chance it will move back to the highs. Traders should be cautious as investor confidence is fragile. Commodities continue to struggle against a strong US dollar. These commodity stocks are oversold, but it will take time to repair their charts. Well, that has been the Stockscores Market Minutes for October 24th, 2014. Have a great week in the market and trade well.